All right, so good morning, good afternoon, and good evening to all of you. No, today class, our discussion is all about the project evaluation. Okay, same pa rin with the net investment. No? So, what are the scenario analysis, the break even, no? To be sensitive in terms of decision, and that would be our discussion for today. Okay, so let's start. So, very important class that in terms of the project analysis and evaluation is number one, we discuss first about to perform and interpret sensitivity analysis for the proposed investment. Okay, number two, we will discuss about perform and interpret scenario analysis for the proposed investment. We'll discuss also about interpret cash, your accounting, all right, your financial break even, and also we have also what you call the operating leverage, all right, can be affect the cash flows, and also discuss how the capital rationing affects the ability of the companies to accept the project. Okay, so yan yung ating gagawin. No? So first thing that we will do is about evaluating first. All right, the NPV. Ano nga yung NPV? Your net present value. Okay? The next one is all about scenario and other what if analysis. Okay? Your break even analysis, your operating cash flow, sales volume, and what you call the break even. Okay? And also the operating leverage, and we will end with the capital rationing. Okay? Let's start. So, very important class. No? Please take note that in terms of your capital budgeting, is about NPV. So ano ba class ang ibig sabihin ng NPV or the net present value? 'Di ba? So NPV is basically you will accept the proposal if the NPV is positive and zero. Zero or positive. So please take note of this PowerPoint. No? Ano bang sinabi about NPV? NPV are just that estimates. No? A positive NPV is a good start. Now, we need to take closer, no? Very important is what you call forecasting risk and also the sources of value. Alright, so ano bang ibig sabihin nito, class, no? So, in terms of forecasting risk, ang sinasabi, how sensitive is our NPV, okay? Uh, in terms of the cash flow estimates, okay? So, the more sensitive the greater the forecasting risk. Okay. All right. Sources of value. Why does this project create a value? Okay. So that would be the sources of value, and also the project. No, the project that will create or add values. Okay. Uh, Very important also, class, that in terms of scenario analysis. Okay. Um what happens to the NPV under the different cash flow scenarios. No, at very least, look at the best case, the worst case, and it measures of the range. Okay? In terms of the base case, ang sanabi, high revenue, low cost. Uh, Worst case naman, you have low revenues and high cost. And measures of the range of possible outcomes. No? Also, class, best case and worst case are not necessarily probable. Okay? But they can still be possible. We go back to your accounting. Ano ba ang sinasabi about probability? No, it will happen. Diba? Yung possibility naman, pwedeng hindi mangyari, pwedeng mangyari. Okay? So, that's your basic accounting, no, or financial accounting. Okay. So, for example, consider this project, no? Uh, uh, Initial cost of 200,000, and the project has a 5-year useful life, and there is no salvage value. All right? The precision is straight line, and you have the required rate of return, which is at 12%, and the tax rate naman is at 21%. The base or the lower and the upper level values are given for the unit sales. which is just the price per unit, the variable cost per unit, and your total fixed cost. Okay? So, kaya lang hindi nakiklik, no? Yung Excel, for example, that you have here the base case, the worst case, and the best case, no? So, base case, sorry. Net income is 23,700 and you have your cash flow of 63,700. If you notice, the difference is 40,000. Saan ang galing yung 40,000? Dito yan ang galing, no? 200,000 divided by 5 year, you have 40,000. And that would be your depreciation. Okay? And worst case naman, 18,565 and you have 21,435. So, and the NPV is negative. Okay, dito klase pangit na. And we have a negative 17.7. And also, we have the best case, 71,495. Oh, maganda na, no? And you have 111,495 and 201,915. Mas okay, no? So, to be sensitive, depende yan, no? Whether it is a base case or the waste case, no? So, again, to be sensitive, no? What happens to the NPV when we change one variable at a time? And this is a subset of a scenario analysis. Best case, worst case, no? And we're looking at the effect of the specific variables on the NPV. Okay? So the greater the volatility in the net present value in relation to the specific variable, the larger the forecasting risk. Okay? Associated with that variable. And the more attention we want to pay its estimation. Okay? And that would be yung ating sensitivity analysis. Alright. So, summary of this sensitivity analysis. Alright. Very important. Naulit lang, no? So, you have 6,000, you have 63,700, 29,624. Ano nangyari? Parang gumanda, no? Especially your worst case. Alright? Although, mas maganda pa din yung base case, no? 6,500, 6,000. So, ibig sabihin, it would depends, no? Particularly, no? Kung ilan ba, okay? Or how much ba would be your NPV. We go back to our explanation. As long as the NPV is 0 or positive, you will accept the proposal. Okay? So, you will accept the proposal. Alright? So, next one. We have also here simulation analysis. Okay? Ano bang ibig sabihin ng simulation analysis? So, ang sabi is a really just an expanded sensitivity analysis and ratio analysis. Combination of ratio, sensitivity and scenario. Alright, so ano ibig sabihin nito, class? So, Monte Carlo simulations is that to identify, no? Monte Carlo, no? So, about can estimate thousands of possible outcomes based on conditional probability. Okay? The output is a probability distributions to your distributions for your net present value. And then estimates of the probability of obtaining a positive NPV. No? Simulations only works as well as the information that is entered, and very bad decisions can be made if care is not taken, no, to analyze the interaction between the variables. Okay? So that's one, no, that we need to understand. All right. So, making a decision. Okay, but before that, ano bang ibig sabihin ng paralysis analysis? Okay. Okay, ano bang ibig sabihin nito, no? Ibig sabihin, you are overthinker, no? You analyze more. Okay? So, very important, class, that in terms of paralysis of analysis, no, at some point you have to make decision. If the majority of your scenario have positive NPVs, then you can feel reasonably comfortable about accepting the project. Okay? If you have a crucial variable that leads to a negative NPV with a small change in the estimates, then you want to forego the project. go back to my explanation. No, you will accept the proposal if it is zero or positive. If there would be small change of the estimate, okay lang yan na i-forgo mo na. Okay? Do not overthink. Okay, very important also class in estimating or project evaluation, yung tinatawag nating break-even analysis or the common tools for analyzing this one is that it is between the sales volume and the probability. There are three common break-even measures, no? Number one, accounting for the break-even. Alam niyo na to class, di ba? Accounting for break-even is that your sales is equals to your total cost. That's why your net income here is zero. And if you have cash break-even point, the sales volume at which OCF or the cash flow, no, is zero. Okay, so and then outflow, no, or cash flow, and the financial break-even, the sales volume at which NPV is zero. Mamaya, we will discuss one by one. Okay, there are two types of costs, no? Ano nga yan? Variable and fixed. This is the most important, no? In terms of the break-even, variable and fixed. In terms of total variable cost, please take note of your total variable cost quantity and you will multiply it by the cost per unit. No? And the fixed costs are constant regardless of the output. Class, if you notice, the total cost here is equals to total fixed cost plus the variable. Please take note of the variable. It should be the variable cost per unit to be multiplied by the quantity. Class, makinig ha. In terms of computing for the variable cost per unit will remain the same regardless of the activity level, not the total variable cost. The constant here is your total fixed cost and the variable cost per unit. That's why in computing for the variable cost, it is the variable cost per unit to be multiplied by quantity. Okay. Sige. So, that's very important, no? For example, your firm pays 3,000 per month in fixed costs. You also pay 15 pesos or $15 per unit to produce your product. What is your total cost if you produce 1,000 units? Or what if 5,000 units? How do we compute first for the average cost? It is the total cost divided by the number of units. It will decrease as the number of units increases. Tingin nyo bakit? Go back to the cost behavior na ating discussion sa cost accounting. What will happen to your total or to your variable cost per, we're talking here of per unit ha. What will happen to the variable cost per unit when you have when your sales is go up? It will remain the same. How about your fixed cost per unit? Pag tumataas yung sales natin, mabababa ang ating fixed cost per unit. That's why the average cost per unit will decrease if there would be an increase in your sales in units. Yan ang ibig sabihin nito class, no? Okay? So, will decrease as the number of units increases. So go back to my discussions, no, about about cost behavior, no, and you have marginal cost. The cost to produce one more unit, same also as the variable cost per unit. Now, example, what is the average cost and the marginal cost under each situation in the previous example? So, if you produce 1,000 units, the average is 18,000. Sir, saan po nanggaling yung 18,000? Di ba class? Go back to this. 3,000 times 15, 1,000 times 15 is 15,000 times 3. You have 18,000. Mamaya, 78,000. 15,000 times 15 times 5,000, 75,000 plus 3, you have 78. Ganun lang, no? So, in terms of this, 18,000 divided by 1,000 and you have here 18. So, ano class yung ating 18, no? And that would be the average cost per unit, no? and that would be the average cost per unit. Okay? So, ganun lang class ha. Yung ating, yan. So, yung ating units. How about naman produce 5,000 units? Average is equals to 78,000 divided by 5,000, and you have 15.60. And that would be your average and marginal cost. If you notice last, pag tumataas yung ating units, 1,000 to 5,000, your average cost per unit will decrease. Mas maganda. Okay. Okay. How do we compute for the break even again? Your sales is equals to your total cost. And your total cost is the variable cost per unit to be multiplied by the quantity plus your fixed cost. The quantity that leads to a zero net income. If your net income is equals to sales minus variable cost minus fixed cost. O class, we separate lang the depreciation. No? Then, minus 1 minus tax, and you have 0. Okay? And you have 0. Then, you have a quantity, a QP, quantity to be multiplied by price minus variable cost per unit times quantity minus fixed cost minus depreciation, you have 0. So therefore, Q minus PV is equals to FC plus D. Nilagay lang sa kabila. Therefore, diba ito yung formula natin, kadalasan, and that would be your fixed cost plus your dividends divided by P minus V. P minus V, that would be your selling price minus your variable cost per unit. Alright. So, using the break even, your accounting break even is often used as an early stage, no? In terms of the screening number. It cannot be the break if a project cannot break even on an accounting basis, then it is not going to be a worthwhile project. Okay? An accounting break even gives the managers an indication on how a project will impact the accounting profit. How about naman accounting break even in your cash flow? What we are more interested in cash flow than we are in the accounting numbers. Kasi class, we are talking here of capital budgeting. Sabi ko in our previous, no, very important yung tinatawag nating cash flow. Hindi tayo accounting. Okay? For the meantime. Okay? Because of the large amount of investment. As long as the firm has a non-cash deductions, there will be a positive cash flow. And if the firms break even on an accounting basis, cash flow is equals to your depreciation. Okay? And if the firm just breaks even on the accounting basis, NPV will generally be equals or be negative, less than to 0. Sige. So, example tayo. Consider this one. A new project requires an initial investment of 5 million. Now, so please take note, you have 5 million and will be depreciated to an expected salvage value of 5 years. And the price of the new product is expected to be 25,000 and the variable cost is 15,000. 25 minus 15, you have 10 as your CM. The fixed cost naman is 1 million. What is the accounting break-even point? What if depreciation is 1 million? So Q, 1 million is your fixed cost plus 1 million as your depreciation. Ibig sabihin, you have 2 million fixed cost divided by your selling price minus the variable cost per unit, and that would be your contribution margin. Ibig sabihin, class, magkano ang ating break-even? 200 units. Okay? Ganun lang. Ganun kadali. No? So again, the formula here is fixed cost plus the depreciation divided by your contribution margin. The CM here is your selling price minus the variable cost per unit. Okay? How about naman if it is sales volume, and operating cash flow. What is the operating cash flow at the accounting break even? As you notice, you have the operating cash flow is equals to selling price minus variable cost minus fixed cost minus your depreciation. Then we add back our depreciation. Therefore, 200 times 25, that would be your sales, minus 200 times 15, that would be your variable cost. You minus that one, that would be CM, minus your fixed cost, you minus your depreciation, but we add back our depreciation. Therefore, you have 1 million. Tanggalin mo to class, ito, saka ito, matitira na lang ay ito, no? So, ito class ay magkaiba, no? What is the cash break even, ignoring income taxes? Since the operating cash flow is equals to CM, selling price minus variable cost per unit, your quantity minus fixed cost minus depreciation, then we add back depreciation. Pag tinanggal na to class, di ba? Algebra tayo. So PV minus V to be multiplied by Q, selling price minus variable cost per unit times Q minus FC. O, malamang zero, no? Zero will be our operating cash flow, no? Kasi nga break even. Therefore, in computing for Q, operating cash flow plus fixed cost divided by your CM per unit. Magkano yung operating cash flow as discussed this one? Zero. Plus fixed cost of 1 million. Kasi nga, again, depreciation is not part of the, hindi siya part, no, ganun lang, hindi siya part ng ating fixed cost. Kasi nga, operating cash flow. Just divide it by the CM. Magkano class ang break even natin? 100 units. Okay? So, hopefully class ha, naintindihan to class ha, particularly about the operating cash flow and at the same time, your accounting cash flow. Okay. Next one. So, again, there are three types of break even, and that would be your accounting break even, where net income is zero, wherein your quantity is equals to fixed cost plus depreciation divided by P minus V. Then you have cash break even, where OCF is zero. Quantity is equals to fixed cost plus OCF divided by P minus V, ignoring taxes. In terms naman of financial break-even, mamaya I have sample where the NPV is zero. Cash break-even should always less than with the accounting break-even and less than with the financial break-even. Ibig sabihin, yung cash break-even ang pinaka mababa in terms of your break-even, followed by accounting break-even and financial break-even. Mas malaki sa financial break-even. Magkano yung cash break-even kanina? 100. Accounting break-even, 200. Based doon sa example natin ha. Mamaya, we'll discuss naman about financial break-even. So, in terms naman of financial break-even, consider this example. We assume that the required return of 18%, accounting break-even is 200. Cash break-even is 100, ignoring income taxes. What is the financial break-even? Now, class, what OCF for payment makes if you have NPV is 0? The terms is 5. The PV is 5 million. Ibig sabihin, class, would be your net investment and you have 18. How do we compute for 1598.89? We go back to the net present value. How do we compute for the net present value? Present value of cash flows minus net investment is equals to 0. Since your 5 million is your net investment and we compute now for the PV of annuity of 1 at 18%, magkano yan? Sige, gawin natin ay 1.18. Sige, calculator muna. Kunin mo yung calculator nyo. 1.18 divided by equal sign 5 times. 1, 2, 3, 4, 5. Minus 1 divided by uh, divided by 0.18. And that would be 3.127171102. So, gagawin mo class, this is the PV of annuity. Just divide the 5 billion by 3.7217171, yung present value of annuity, and that would be the 1598.889. Hopefully class, na-complete mo yun ha. 1598.9. Sayang hindi ako pwede magsulat, no? Okay? So, ibig sabihin, 1 million, and that would be the fixed cost plus your operating cash flow divided by your CM, selling price minus variable cost per unit. And class, if you notice, magkano class ang break-even mo sa financial? 260 units. But the question, if the company can we sell it ba? Okay? Yan, medyo mahirap siya kung mahirap kayong magbenta. Okay? And that would be the financial break-even. Next one is all about operating leverage. Ano nga yung operating leverage? To measure your operating risk, di ba? How do we compute for operating leverage? CM divided by EBIT, or the change in EBIT divided by change in sales. Same lang naman yan dito sa capital budgeting. The operating leverage is the relationship between the sales and the operating cash flow. The degree of operating leverage, it measures the relationship between the higher the DOL, the greater the variability of operating cash flow. Yes. Kasi ibig sabihin, you are risky. The higher the fixed cost, the higher the DOL. Yes. Because CM, what will happen to our net income? Bababa. Because the formula is CM divided by net income. DOL or EBIT, sorry. DOL depends on the sales level. Yeah. You are that you are starting from. That's why the DOL here, in terms of capital budgeting, the formula is 1 plus your fixed cost plus your operating cash flow. I have sample here. Consider the following. No? Suppose you have 300 units and this meets all the three break even. What is the DOL at the sales level? Your operating cash flow is 25,000 minus 15,000 times 300. That would be your CM minus 1,000. You have 2,000. Hindi kasama yung depreciation, ha. The DOL is that 1 plus 1,000. 1,000 is your 1,000 is your, again, anong formula class? Fixed cost, no? Sorry, fixed cost siya. Fixed cost divided by ito yan, 1 million divided by OCF. And that would be 1.5. Class, if you notice, same siya doon sa ating usual operating leverage. Ano nga yung formula? Change in EBIT divided by change in sales. Class, if you notice here, instead of EBIT, you will have OCF. Okay? Change in OCF is equals to the DOL to be multiplied by the percentage change in quantity. That's why, class, the percentage change in OCF, and that would be the operating cash flow, is equals to 1.5 to be multiplied by 0.2. You have 30%. DOL is 1.5. Change is 20%. That's why you have 30%. Alam niyo ba? You can be able to compute that if there would be an increase of 2,000. OCF would increase to 2.6. If the 2,000 would be your operating cash flow. Class, if you notice, yan ay the same lang doon sa ating ordinary operating leverage na kinocompute natin. Diba? Yes. Okay. Next one. Next one is all about capital rationing. No? Capital rationing occurs when a firm or division has limited resources. So ito class, mga terms lang to, no? So soft rationing, the limited resources are temporary, often self-imposed. And we have hard rationing, and that would be capital will never be available for this project. The profitability index is useful when the manager is faced with soft rationing because you have a limited resources that are temporary. Okay? Oh, ethical issues naman. Very important is ethical issues here. It is ethical for a medical patient to pay for a portion of R&D costs since experimental procedures are not covered by insurance prior to the introduction of the final product. Of course, dapat it should be covered, no, by the insurance, no. It is proper for physician to recommend this procedure when they have vested interest. Of course, hindi. Dapat we need also to consider or we need to avoid conflict of interest. All right. All right. So I think this is the end of the chapter for the project evaluation in terms of the uh, capital budgeting. So again, thank you very much and hope to see you in my next video. Bye bye.